Okay, welcome back to the ICT course. This video is going to be on all of the basics that I think you need to know about order blocks. But again, before I teach from my perspective, I want to give credit to ICT for all these concepts that he's taught about. So if you want a deeper understanding of raw ICT, then check out his channel. So the theory of order blocks is that when there's a change in the state of delivery, like from bearish to bullish, the algorithm and the institutions will push price to return to these areas before continuing in the original direction. And ICT defines an order block as the last consecutive candles in one direction before the move in the opposite direction. So here you can see on the top left, 3 bullish candles before a move to the downside, and price later retested this zone before a small push down, but not creating a new low, as it won't always. The second zone is just 1 bullish candle before a move down, and this was retested nicely and then created new lows. So these are just 2 examples of order blocks that you could use. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me, and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on a funded accounts with proven results. And also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options, and let's get back to the video. ICT also teaches about rejection blocks, which are effectively hidden order blocks in the wicks of candles, and they show a rejection of price within the time period of the candle, and you can look for entries when price returns to these areas. Breaker blocks are another concept, and these are an order block that price didn't respect, but instead broke through, and they can be used as support or resistance in the future, like in the line drawing that you can see here, or they can be used with FEGs like you saw in the last video. So in this case, you can see this was a supply zone. Price didn't respect it. What you'd be expecting here is price to continue down from it. The price broke through it, and now it can be used as an area of support. Looking to take buys from this area, taking price upwards. So this is a nice example of a breaker block being respected pretty much perfectly, but don't assume it will always be this clear. As you can see, it looks pretty much exactly the same as line drawing. You've got your supply zone, price doesn't respect it, pushes up through. When price returns to this zone, you can look for a buy and take price up again. So that's all I had to say about order blocks. Hopefully you learned something. Make sure to subscribe and stay tuned for the next video on liquidity. Yeah, thanks for watching, and I'll see you in the next one.